What's up, guys? It's Rob here, and today we need to talk about something that's affecting just about every stock out there and has unfortunately, over the past many months, been dragging the entire stock market down. It's been on the forefront of investors' minds, and it's actually twofold. It's both inflation and interest rates, and we have some good news on both of those fronts and some bad news on one of those fronts, but we'll break that down real quick for you guys. So basically, we're looking at two things. One, inflation. We're getting a new CPI report on Tuesday, September 13th. So early next week, we should expect a new CPI report coming out. The month over month data, analysts are actually seeing a decrease. So deflation rather than inflation, deflation of minus 0.1%, bringing us down to what they're guesstimating will be an 8.1% annualized inflation rate year over year. And you can see that that would actually bring us down to the lowest levels we've seen since February of 2022. So that would actually be a fairly impressive thing if we were able to get inflation moving down by that much, especially following the big decrease that we saw in the month prior. That would obviously not take us down to super low levels. We'd still be above 8% year over year inflation. But it would certainly encourage investors to look more fondly towards inflation. They wouldn't be as worried about it since it wouldn't be climbing every month. And that's really been scaring a lot of people out of the stock market, because what happens when inflation runs high is the Fed tends to raise rates. And people don't like seeing that because it ends up leading to a situation where you could get gains on your money, leaving it in a bank account. And then people are less inclined to invest in the stock market, putting their money there where it's potentially at risk of decreasing in value. And that leads to overall stock prices moving down whenever the Fed raises rates. And unfortunately, the Fed's governor, Christopher Waller, just said that he expects significant rate hikes this month when they do end up raising rates. Now, for the past couple of months, we've seen rate hikes of 0.75%. And he's expecting, or at least analysts are expecting, that we'll continue to see that level of rate hikes this month. Hopefully, though, based on the inflation data that we're going to be getting in just a couple of days, hopefully we won't actually need that for too much longer. Hopefully rates won't have to continue going up if we can continue to see inflation moving down on a steady trajectory. He says he backs a data-dependent approach, and seen that for many months in a row, seen many months of deflation. And inflation actually coming back closer to 2% could lead the Fed to believe that maybe they should be a little bit more lenient towards rate hikes. Okay, that would be a very good thing. Now we're going to have to see what they do for sure at the end of this month. Fed Waller isn't at the end of the day in charge of all of this. Jerome Powell has more say than he does, and even it's not even up to solely him. So regarding the stock market, obviously stocks have been on a downtrend. Even over the past couple of weeks, they've been on a downtrend since investors started realizing that, or at least since the Fed revealed that they would be raising rates pretty aggressively despite seeing lower inflation numbers. However, we are starting to make a little bit of a comeback. That is a good thing in my mind. I'm glad to see it. I expect that over the next couple of months, investors will realize, hopefully, that inflation will be simmering down. I mean, it's not a guarantee that that will happen. Obviously, other world events could go on that would cause higher inflation. But at the moment, it's looking like we have some good data showing that inflation should, at the very least over the next while, be coming down. As you can see, in August, we had much lower gas prices. Okay, this is a chart of the price of oil. We had much lower oil and gas prices than we did in the month of July. So we're hopefully going to see some big deflation in that category, leading to overall deflation in the entire economy. Whenever gas gets more expensive, it becomes very difficult to produce goods for reasonable prices. And so when gas goes down in price, it makes it a lot more reasonable to produce goods for reasonable prices and to transport goods and do all of that. So I closely watch the price of oil, and it's looking like in September we're seeing even lower prices than we were in August. So all good things there. I'm expecting that we'll continue to see good stuff on that front as we end up getting better supply lines going for oil and more oil producers come online to take advantage of the price that has been elevated for the past many months. So other than that, guys, keep in mind, none of this is financial advice, just my opinion, just wanting to share some of the news that I found out there with you guys and some of my thoughts on it. So if you appreciate it, feel free to subscribe to the channel. Other than that, I hope you have a great rest of your day. I'll see you in the next one. Bye.